Welcome back. Now we'll look at where markets ended the week. Record highs early on in the week at the end of the government shutdown, but then concerns set in. When are we going to get all of that missing economic data? The Labor Secretary telling me that the jobs report of September could come out next week, but we may never see the October jobs or consumer inflation data. With this kind of uncertainty, the probability for a December rate cut has now fallen to around 50%, down from 95%. Joining me now is SlateStone Wealth Chief Market Strategist Kenny Polcari. Kenny, good to see you. Thank you so much for being here. What do you make of this?
So this is going to shake the branches a little bit. I'm not surprised. I actually think it gets a little bit unnerving and uncomfortable for people. But look, we're not anywhere near correction zone yet, so there's no reason to get nervous. It's very much within the normal trading pattern. It does feel uncomfortable, but it is what it is. And I would start looking at where the opportunities are, the stocks that get really dislocated when the story has not changed.
Yeah, well, NVIDIA is going to be reporting earnings next week, and that stock is off of the highs. Do you think the valuations in the AI sector have become overdone?
I do think they've been a little bit stretched. I don't think they're in bubble territory. I just think, like anything, they're a little bit stretched and they need to correct. And I think that's what we are starting to see. And I'm not necessarily concerned about that at all. I think a lot of this is also driven around NVIDIA's earnings, which come out on Wednesday. But the stock is already down now off its highs. I think it's down about 12% going into its earnings. So it's in a very interesting place that you can start to kind of look at it again. It's on sale. Start to, dip your toes in again. Look, we already own it. So it's not like I'm not participating, but certainly on a sale type atmosphere, down 15, 18%, you have to think about buying it.
Any other catalysts for the week ahead that you want to be trading around? How do you want to allocate capital right here?
I think you have to be worried about or concerned about what's coming out of the Fed. I know that last week we saw some Fed members come out and start to really express some caution about where they think rates are going to go in December. I think that's also part of this story. And while I don't think that, I still think they're going to end up cutting rates by 25 basis points. I do. While even though we had 3 or 4 people say no, I think the majority is still going to vote yes. And so I think that will settle things down. And I think you have to start looking at other sectors. Look, healthcare has been a way underperformer. It is now up 11% in the year. I still think there's opportunity there. I think you have to look at names like more stable names. Verizon as a name that we like, that we own, offers stability to a portfolio. I think you got to look at names like that. And I think you have to look at consumer staple names, which, by the way, are negative on the year, down by about 1%. But when things get a little bit anxious, consumer staples, they're good dividend payers, and you can put some money there and not really worry about it because it's been an underperformer. So if people get nervous, they're going to go to where they've been outperforming. So they're going to hit tech, they're going to hit communications, they're going to hit industrials, they'll even hit financials. So you want to be in a place, if you want stock exposure, you want to look at some of these other sectors that have been underperforming.
Yeah, really interesting that the consumer staples have not kept up with what has been a melt up in the broader economy and the broader stock market.
Well, because they're boring, right? Why would you want to own consumer staples? And you can buy AI and go up 50%. Consumer staples don't act like that. But if you start to see some anxiousness in the markets and you start to see some of the high flyers come off, then you are going to see money go into consumer staples. And look, consumer staples are just that. They're things that people need, not things that people want, right? And so, therefore, there's always going to be a market for toothpaste and toilet paper and all detergents and all the things that you need. So in an environment like this, you're going to find some value there.
Yeah, great points all around. Kenny, great to see you. Thanks so much.
Always a pleasure. Thanks.